Good morning, traders. It is 8:02 a.m. Chicago time on Wednesday, the 3rd of August, 2016. Again, broadcasting from home. The broadband is not stable here for some reason, so it might cut out. Just be patient. Use the dial on your monitor to replay a couple of seconds. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall market sentiment this morning, there's a slight risk-off sentiment still, with money flows going into crude oil this morning. The best performer in the universe that I'm watching, followed by the US dollar, and then the Bund, and everything else is red, with gold being down 0.35% overall. Not much movement overnight. The news, China services sector is slowing. The Zhaixin market services came in at 51.7 for July versus 52.7 from June. China's state planner says that PBOC should ease at the appropriate time. Britain's services sector got crushed by Brexit. BMI data released by Market and the Chartered Institute of Procurement and Supply showed that Britain's services sector posted its sharpest drop on record after the UK's vote to leave the European Union. And then Europe seeing little effect. The PMI in the EU came in slightly weak. Anyway, that's how things are setting up. Other than that, just seeing the CAC down, the Euro US dollars down, Hang Seng's down 1.79%. The DAX is almost flat. The Euro Stocks is almost flat. So are the S&P futures. Not much more news to talk about, so we'll move on. As far as what we're expecting today, we're looking for, by the way, ADP came out today, slightly better. The ADP number announced, remember ADP is the payroll company, and this is intended to be a precursor to the non-farm payrolls, which is in 2 days on Friday. July ADP employment change came in at 179,000 versus 170,000 estimated, so slightly better. And then as far as what we're expecting going forward, at 8:45 Central, 9:45 Eastern, that's 15 minutes after the bell, U.S. Services PMI final is expected at 51. And then at 9 Central, 10 Eastern, ISM non-manufacturing at 56. We're looking for crude oil, gas, and distillates. Gasoline and distillates at 9:30. Crude oil expected at negative 1.75 million. Distillate inventory 750,000 barrels to the downside, and gasoline negative 1 million. Tesla announces after the market. There are no speakers today on record. So fairly quiet day after we sold off yesterday. Not much more to discuss as far as news. Let's have a quick look at what we got yesterday. If we look at yesterday's action, this was the primary expectation. The market was opening right up against the MC point of control, lacking any evidence of a sell-off or anything unusual. The hypotheses follow the same pattern, the same auction pattern as usual. And so yesterday the expectation was for a push down into the 2157.50 area, find a base, and then start to rotate up back up to 2166. The secondary hypothesis, and clearly that didn't work out. The secondary hypothesis for yesterday is the opposite. Chop around on the open auction up to 2166, then 2157.50, with most of the trading occurring right in the microcomposite high volume node. And remember, we have a low volume node right here and that's really the that's what I'm using as a cap at 2166. So that also didn't work. Later in the session, so this was about 16 minutes in. At about 18 minutes in, I discussed the potential for a drop, and if it does drop, I discussed the targets, and that's what you've got there. If what you see in front of you is if it drops from where we are, then the key area to test is between 52 and 49 with an extension to 46, down to 43 being the extreme, 43 being the extreme, and that's pretty much what is fairly spot on to what happened. Um, it on the drop, we were not able to recover. We built a pretty high volume node in this composite low volume node down here that I outlined in this video, and so this ended up being the plan that worked. So this was the one that that actually came through. Let's take a quick look at. So those were the expectations. Let's take a quick look at what happened. We had what I called a beautiful opening swing yesterday. We have not had an opening swing this pretty in quite some time. And the reason I say that is we opened right in value, in range in value. We had a very clear and clean swing down. We found our buyers, our early buyers at 59.75. Then we had a very clear and clean swing up to find the sellers at 21.64. Then we break below. We break below, and then we retest just below the mid, and then we continue to tap on the lows. This really was a beautiful setup. We have not had this sort of clean auction in quite some time. Yes, today's broadcast is in 720p to minimize the number of frames that are dropped because I'm broadcasting from home. I don't come into the office until a little bit later. So if you look at what happened here, it was unable to recover. This is your opening swing range right here. It fell right through. So we got a clear opening swing. So this is pretty much textbook auction here. We got a clear opening swing. We extended to the downside, and then we were not able to recover above the VWAP and the mid, and then we got the big drop. We got the big drop, and then from there it was all targeting 52 to 49. So we filled in the 52 to 49, and we pushed all the way down to 41.50. Remember, the expectation is get down into the composite low volume node and test down into the 43. The 43 comes to us from the last, and I'll show you that in a minute. The last composite in this area, the last balance zone in this area, having the point of control at 46 and the low, the value low of the composite at 43 with some other confluence. So that's why I expected 43 test on the extension. From there, we ended up retesting the IB. Now remember, the first test is always best. You can write that on a little post-it and stick it on your monitor if you want. The first test of the IB right there was a pretty decent. That created another opportunity for a 3-point rotation down. I passed on the second test, and then from here there was not much for me to do until it got to the mid here. But the mid coincided. The mid coincided with the closing range trade, and so we have to pass on it. Although this really, this mid setup was fairly decent with very cleanly defined risk here. The risk would have been above 55, giving us about a 2 points of risk, 2.25 points of risk for a rotation back to the point of control on the close. 2 points risked for a 5-point return. That's pretty decent profit factor there. The key number to watch today is right up here at 57. The reason 57 is important is because it is the key low volume node from yesterday's profile. This is the lowest neckline ahead of the point, the VPOC area, or the high volume node. The first and lowest neck or low volume node on top of and below the point of control is what I call the key low volume node. The key low volume node yesterday was 2157, but also 2157 represents the mid since the swing high. For those who are fibbers, if we throw a fib up here, RTH only from the high of 2172.25 to the low of 41.5, you'll see that the midpoint of that downswing is 57.25. On a first test, the expectation is that that'll likely hold. And so that's how we're set up. The overnight session pushed just 2 ticks above yesterday's high. So if we zoom in here, you'll see that yesterday's high on the close is 53.5, and the overnight session pushed to 2154, and the overnight session really did not accomplish much at all. Let's clear this and look at the overnight to continue to build out our story. Complete balance overnight. Very clear balance. This is textbook balance in value. Value on top of value. Clear balance with the kurtosis in the middle. This is basically saying that the market had very little to price in. Volume so far today is just over 200,000, I believe. I can't read it on my chart. It's about 212,000. 212,000. So volume was pretty decent overnight. It's normal. And we've had another instance of a market testing up, testing down, and getting tangled with them in the mid. We don't have our setup that we've had over the last few days, which is test up, impulsive down, pull back, and then start to push lower. So what this is saying is anything goes today on the open. We're looking for an open auction on the open again, and pretty much a noisy open is what's most likely going to happen. We're likely to open here in the composite low volume node. This composite low volume node you have here on your flex levels, this bluish purplish area, is going to disappear as I remove it from the flex levels. And that's not going to be as relevant. It's no longer a zone, it's actually a price. Right at 2152, which was last week's low. That's the FOMC low, last week's low, 2152, and that becomes a key area to mark. But it's not a low volume node zone. A low volume node zone acts somewhat like a gap, and that's pretty much done. It was tested from above and below yesterday, and it's complete. So what we have today, if we look at the profile from yesterday, not much to glean there, except that we see there's an excess. The market basically opened and shot down. There's an excess with a single print starting at 2154. This is the overnight high, all the way up to 2157 even, which is that fib mid, as well as the low volume node. Again, more confluence at 2157. So we'll pay attention to that today. This morning, the expectation is for, let's put that back where it belongs. The expectation this morning, this is a little noisy here, this chart. The expectation this morning is for the market to open, looking for an open auction with wide swings. I'm expecting intermediate term, intermediate time frame traders to be active this morning. I'm looking for wideish swings on the opening swing. I'm looking for a test down into the overnight low, and then the potential for a recovery back up to 2157. That'll be the primary hypothesis. Remember, we are still in a bull flag type of formation in the long run. We are still likely to push back into the balance that we were in. At a minimum, we are likely to this guy needs to be banned. Let's block this guy. There we go. We are likely to test from below, so I'm looking for it to push back up into the 2157 at some point today. That's the primary hypothesis here. Secondary hypothesis, it's again the opposite. Wide opening swing, test into the overnight high, attempt the 2157. Would love to see sellers step in, failure, and then a push back down into the point of control from yesterday, giving us 10 points of range to trade with once the test is complete. I am simply going to wait that out. I do not participate early in the chop. I'll wait for the failure and rotation down. And so, you know, a few things are broken. The profile shows that the trend up, that channel I showed yesterday, the one-time framing up, and whoa, somebody just mentioned it, the one-time framing up has stopped based on yesterday's performance. But again, I'm still looking for a retest of the prior range. The market is very likely to check up, to check on the participation from the buyers and to see if it can find sellers or buyers as it tests the last composite balance before it continues lower. And that's why these hypotheses exist the way they are. If it tests lower and starts pushing higher, that says one thing. It says that we're likely to take back, mark my words, if it tests lower first and then it finds buyers and starts rotating up, it is likely to take back the sell-off that we had yesterday, and we're likely to test 2164 over the next day or so. If not today, then Thursday, then we have non-farm payrolls on Friday. This is the behavior that we've seen here over the last few weeks as buyers just continue to step in and push the market higher. Don't be surprised if that happens. Am I expecting this thing to the bottom to drop out and for it to go down to 2080 and a quarter immediately? Probably not. But overall, be cautious if you're a bear. If you've convinced yourself that the market's overbought, be cautious. This is very likely to turn back up and push right into your face on the high side and squeeze you out. I've seen a lot of people go through that recently, and that's not fun. Anyway, I'll leave you with that. Good luck, and I'll catch you tomorrow morning. Take care.